Hey everyone, hwsteele here. In this video, I'm going to talk about Gann angles. First, let's look real quick. We see this is the Euro US dollar. This is a 1 hour chart. And I've got two angles on the chart. We see this is the 1 by 1 angle, and then this is the 1 by 2 angle. Now, this angle is set so it moves up at the rate of 1 pip for every hour of time that goes by. Thus, 1 by 1 angle. This is a 1 by 2 angle, which means it moves up 2 pips for every hour of time that goes by. And just in case you're wondering, a lot of people don't even, they don't use the angles properly, they don't draw them properly, or they use the tools that come with a trading platform, which usually doesn't draw the angles properly either. A lot of people don't even write the names of the angles properly. The first of the two numbers, or the number that comes before the X, that represents time. The number that comes after the X represents price. So if you have a 1 by 4 angle, that means there's 1 unit of time for every 4 units of price. If you have a 4 by 1 angle, that means you have 4 units of time for every 1 unit of price. So hopefully, if you learn nothing else from this video, you'll learn how to write the angle names properly. But moving on, what we have here is a 1 by 1 angle and a 1 by 2 angle. And I've drawn them from this last low right here before the market moved up quite strongly here. And we see that in the future here, the market moved up from this low, and then it did some retracement, moved up to a final top right here. It came down and moved back up, lower top, and then came down and rested on the angle. So this angle actually provided support for the market. And then the angle or the price actually moved up from it and then broke through. And eventually it made it all the way down to the 1 by 1 angle and found support there, bounced off that, did it a couple more times, and will probably break through sometime in the near future. So if you're fortunate enough to have actually drawn your angles properly, the odds are that you're just using them for support and resistance for price. And if that's the case, then you're really missing out on the real strength from these angles, what really happens. What they're really for is to visually give you an idea of when the market squares out either a trading range, a swing range, or actual market price. So what would happen is Gann would draw these angles on the chart, and he would draw them so that he would know when the number of price units had been squared out in time. Or sometimes he would draw the angles up from zero price. So if a market was trading at, say, 60 points, a stock, something like that, he would start the angle at zero, and the angle would go up from there. And every day or week or month would be 1 unit for the 1 by 1 angle. That way he'd know months and months later, he'd be able to tell just by looking at the angle that it was some particular point was squared out. And if you read Gann's stuff, then you know that's what he was looking for, that when price was squared, that you'd expect a change in trend. So even though the support and resistance aspect of these angles is really nice, what we really want to look for is squaring the range, or squaring the price from the bottom or the top, for that matter, the highest it's ever traded at or the lowest it's ever traded at. There's a lot of different possibilities that you can use. Easiest is to just simply square the range. And all you have to do is pick a top or a bottom. We use this bottom, or I should say, I use this bottom right here. And then to square this small swing right here, all you would do is put a horizontal line right there. And then when the 1 by 1 angle crossed this line, you would know that the number of price units, the difference of the number of price units here, that number of units for time expired right here. And half of that number, or the 1 by 2 angle, that happened right here. If I had drawn a 1 by 4 angle, that would be 1/4 the amount of time. Now, if I draw a vertical line right here, where this crossed, we can see that the market made a nice top right there. Right here was the top. It coincided with the halfway point of the square out right there. If I put this line right here where the square out actually happened, we see that we have another decent top right there where the market moved up and then stopped right there at that price because of the time, simply because this swing was squared out right there.